Hey everyone, hope you guys are all having a wonderful day. Let's just hop right into it. The market is kind of in a free fall. Right now you guys can see Bitcoin, but we're going to be going through a whole bunch of stuff right here. In fact, let's actually start with some of the Dow, the NASDAQ, and the S&P futures. This is what I think most people are concerned about right now. You guys saw how far we've come down, how bad everything is, and you guys can see right now we've basically continued off that move. We are off of the bottoms, which I would say is pretty good, but you can see how we just dumped right here, and now we're trying to climb back up. The last few times we've tried to climb back up, it hasn't really gave us anything too good here, so I'm not really holding my breath on this one. But just to show you, it just goes to show you, excuse me, this is going to be a wild week for the markets, and I want you guys to be prepared for this because a lot of you guys are going to try to do some dollar cost averaging, as you should. Some of you guys are going to hold off from doing anything. Some of you guys are going to go all in. Whatever you feel like doing here, and I think dollar cost averaging is probably the safest way to get in here, unless you guys don't want to do anything, which of course is the safest. Be careful if there is more volatility coming along right now. This is just going to lead to pure chaos across the markets here. So this right now is the Dow Jones futures. You can see we've already fallen off a cliff, but we've been coming down for a minute. We just really came boom all of a sudden. There we go. S&P, same move, and the NASDAQ, same move, although the NASDAQ is just a little bit deeper here. So basically what you're seeing right now, if you go over to CNBC, is you're just seeing a bloodbath here, right? Dow Jones down 3%, S&P down 3.5%, and the NASDAQ around 4.5%. Everything looking about as bad as it can be at this point in time. And then also what just happened here a few minutes ago is Trump came out from the plan and he said he doesn't want to see stocks go down, but sometimes you have to take the medicine. So Donald Trump is going to be much more committed to this new tariff regime than I think a lot of us expected here. So what's going to happen on top of that is everybody's going to have to adjust in their own ways. Corporations are going to have to adjust. Me and you as the consumer, we're going to have to adjust. If you guys are a small business owner, you're going to have to adjust. And the market is going to kind of price in that reality for the next few days here, next few weeks. And eventually we will bottom out. We'll talk about some of the clusters we can see right now as far as support levels for the stock market. But I mean, we are just coming down and we are flying down. There's no like, oh, let's have a little bit of a bump. We really haven't had too many of those so far. If anything, I'm hoping that we open up low and we kind of finish off stronger. So it's a green candle, but we still end up less than where we were on Friday afternoon. I think that's probably the best case scenario for today, so we're going to be hopping into that a little bit here. No Loki because I just dropped him off at the kennel over here in Yelm. So I'll pick him up on Friday. It's a long week for him, unfortunately, over there. But I gave him treats and all this other type of stuff and blankets and whatnot. But the goal of today's video, just to go into a deep dive here, talk about everything going on, chill a little bit. I do have a cigar I'm going to light up here in the next few minutes so we can talk about that a little bit more. And hey, bullshit, happy to see you, my man. But yeah, so I got crypto market, stock market, everything kind of lined up here. Some of the news articles going off. I have 3 videos I want us to watch over on CNBC because this is going to get hectic and there was some crazy moments today. On X, this is being called Black Monday, I believe. If I can shift down here a little bit, Brit, Dennis the Menace. There it is. It's number 20 right now. People really aren't talking about it so much, but Black Monday, Gino, is that my Gino Smith? Nope, that's nobody I know about. But yeah, so again, Black Monday, that's what it's being called. We'll click on this in a little bit. I got ChatGPT in case any of you guys have some interesting questions. And I got music going on right now, some lo-fi, which is like real subtle lo-fi here. I'm probably going to keep the volume low because I'm going to have to turn it off in a little bit when we start watching some of these videos go on here, okay? So these are what the futures look like. The rest of the market, like the Dow Jones, it hasn't priced that in just yet. So you can kind of already assume when we're looking at this, oh yeah, we're down. When the market opens up tomorrow morning, we're going to be down quite a bit, all right? Now, going over here to the 4-hour chart, we're just going to go down the list here for the most part. You can see the Dow Jones did have a slight level of support right here. As of now, where are the futures at the Dow? Around 37,465. So that's right down below this level right here, back to this level of support. So, you know, we have an opportunity to bounce, like I said, but it might just be a short-term bounce like this before we ultimately start going down a little bit more. Same thing with the NASDAQ here. You can see we're at a level of support. Right now we're below that level of support. Perhaps you can bounce off of it and have like a nasty looking wick or something similar to that. But it's not looking good for the entire market here. And the same thing with SPY. I'll just go to the daily chart for the SPY here just to make sure it looks a little bit nicer. And again, same type of support. Looking back to what we saw May of last year, we already broke down below the support of July of last year. Now we're just going back to May. If we break down below this, I think there is a lot more pain ahead for certain indices out there, like the SPY and the NASDAQ. Dow Jones, I think, can survive a little bit better, but these tariffs are going to hit everybody at the same time. And again, how the tech companies have to react are probably going to be a little bit different than like a Home Depot may react. Let's say that, right? Now, Russell 2000, we don't talk about this too much. This thing hasn't really gone up too much over the past few years. I have a little bit of money in it right now, and it just has not been performing. I'm not even talking about the last few weeks, but the last few months, right? This is all the way back here in 2008. Most graphs have gone parabolic. This is COVID. This is where we are now. Go over to the SPY, COVID. See how much higher we went? So the Russell hasn't been doing too well because we've had a lot of interest rate hikes over these past few years, and we're still in a high interest rate environment. When we start to see those get cut, of course, then we see the Russell go back up. But obviously, you can see right here where we dive bombed and kept on going down, just like Bitcoin. That was when Jerome Powell came out and said no more rate cuts. Back over here is when Jerome Powell said, "Oh yeah, we're going to be raising rates," and you saw how fast that came down. Right now, interestingly enough, gold is also turning around a little bit. Let's go over to the daily chart. Gold is breaking down. The dollar index is coming back down bit by bit, and then oil. Now, oil's popping off a little bit here from where it was, but oil went down below 60 bucks, and we haven't been this low since April of 2021. So I'm curious if this cheaper oil will, A, cause gas prices to go down, helping out inflation a little bit more. That's one thing. Or will this cause oil juggernauts like the Exxon Mobils, the Chevrons, and the people out in the Middle East, will that make them actually say, hey, we need to cut back on production to spike this oil price back up? Because I don't think anybody knows what to do right now, because nobody has a certainty of what Trump is planning to do. So if they make one step and then Trump goes another way, it's going to be zigzag, 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 and people could lose a lot of money if they aren't careful, aren't taking their time to really analyze what the heck Donald Trump is doing here. Because you guys know, like the AAA gas prices here. Something interesting has been going on as we've been coming down here, right? Current average is $3.25. A week ago it was $3.15. So it's actually gone up over the last week. A month ago it was $3.11. So gas prices have been going up a little bit. Still going down from a year ago. That's of course true, but with the prices coming down all of a sudden, you can see before this drop, there was a nice little pop. You will probably see gas prices, hopefully nationally, maybe come back down to the low threes, maybe even the high twos here for the national. You guys know I live in Washington, so I'm just hoping to get into the threes again. But there may be an opportunity for that, which, as we kind of hop into summer, may be good for the average American. But if everybody's freaking out about the stock market and things like that, they may not be investing as much, they may not be buying as much. One of my big concerns for a lot of you guys is, do you guys have the capital to invest right now, even if it's just a little bit, if the market is kind of going insane like this, and we're seeing, futures down 1,000 points. It was down 1,500 points. It is bouncing back off a little bit. S&P down 3% and the NASDAQ down 4%, which was down about 5.5% to 6% earlier. And you can see right here breaking, Japan stocks plunge over 6% as Asia Pacific markets extend sell-off on Trump tariffs. So we're getting hit, but they're getting hit a little bit harder, right? And that's kind of the strength of our economy overall. But listen to this. Asia Pacific markets extended their sell-off on Monday as fears over a global trade war sparked by U.S. President Donald Trump's tariffs fueled a risk-off mood. Japanese markets led losses in the region in early trading. The benchmark Nikkei 225 plunged 6.4% to hit an 18-month low. Damn. While the broader Topix index plummeted 6.62%, earlier in the day, trading in the Japanese futures was suspended due to the market hitting circuit breakers. Can you freaking believe that? So Asia's not happy about this. Europe's not happy about this. Nobody's happy with this at this point in time. And Trump is going to go it alone on this one and say, hey, we have the economy to flex. Try to test us and see what happens. Now, China's trying to test us and Europe is trying to test us. Maybe a little bit from Canada. Everybody else seems to just be waiting or like bending over backwards to try to get this figured out as soon as possible. I spent some time this morning as I was out and about with Loki in the backyard, watching some videos from Bloomberg, CNBC, then some of the morning talk shows like Fox Mornings, Meet the Press on MSNBC. So I was kind of going on the extremes here, and they were talking to like people like Treasury Secretary Bessent and some of the other guys out there, and I'm hearing different things from different people in the administration. So all I can really say at this point is Trump. We have to take Trump's word and nobody else's, because it seems like there's a disconnect happening here between what certain advisors around Trump are saying or certain secretaries are saying. So I'm hoping we get more clarity, but I think the clarity we have, it's just that we can't listen to the noise around Trump. We just have to kind of hear it from Trump's mouth and see what exactly is going on right now, right? So you can see right here, just different indices right there. Down 5.5, down 5, down 5, down 6, and Shanghai was unch, and the Kospi index was, the Hang Seng index was unch right here. I don't know if they're actually trading right now. That could be something interesting there. But yeah, then they talk about oil and some other stuff like that. But let me know what you guys think about this, because while everything is breaking down right now, we are hitting some levels of support as far as the Dow, the S&P, and the NASDAQ. And over here with Bitcoin, the support level we hit was the 50-week moving average here. And typically when we've hit this mark here, we've bounced off of it forcefully. We've bounced off of it very, very nicely. We didn't bounce off of it, but we came close. We got rejected from it here, but came above, and we didn't come back down. It's when we start breaking down below it and having those candles break down below it, we start to see a little bit more of a grind. For me right now, it feels like we're more at this type of moment here than this type where we broke back down and kind of spazzed back up. But even here, it feels like we did break down below it. Yeah, even if it was a little bit, we still closed down below it. So back it up a little bit more here for Bitcoin, right? Dropping below these 50s is usually not a fun time here. COVID, messed it up a little bit. But I just want to point out, it's not like it happens every time. This is like, 1 out of 2. 1 out of 3, 2 out of 4. We bounced off every other time. So, overall, and the way I'm looking at it now, we're just kind of at these higher levels, not the lower levels like we normally are. But I'm gonna just keep this in, into perspective. And then, of course, if you guys are looking for different support levels, I like to use the cluster method. I know it looks ugly on the chart, but just bear with me for a second. I like the clusters. Next support level, if you go in with a typical Fibonacci level, is going to be 73,488 for Bitcoin, and that's where we could possibly wick down below, right? If things get bad. If you go back to what happened back over here in March, that's actually where we came back down before we had a rapid buying opportunity and people just launched it back up, right? We bounced, broke down, came back above, support, and then ride on, or all the way back over here, right? We still managed to hold that level all the way back over here. We bounced off that level right there. So I wouldn't be surprised at this point if Trump keeps on with the tariffs. We do eventually bounce off that 0.382 level here, or in this circumstance, $73,488.97. I was actually trying to go back a little bit here. And, you guys can go with log or log off if I can find this one here. Our next level of support, if we're doing it this way, is around $68,876. But I'm not using that so much because, of course, what we have here is already a level of resistance like that, right? Level of support. So I'm thinking more of that realm. Well, this is just one big order block to buy around. But again, if we start breaking down below the 50, typically it's not the best sign. We've been there before, right? We've been there before, but I don't think we had the same type of crazy news going on like we had back in the day. Right now, the tariffs are just destroying everything in their path as far as people thinking, should I buy, should I sell? Everybody's panic selling, right? You think Bitcoin looks bad on this chart? Go over here to something like an XLM, right? Had a beautiful pop, but it's been dying for the past few months. Injective, dying for a while. Pendle, dying for a minute. NMR, Fetch, Oil token, right? Ocean, Caspa, Tron's still doing okay. I like Tron. Matic, poor Matic is going to be extinct here, right? And let's pull this back up to the other Bitcoin here. And what I want to do is actually That's not the right setting. There we go. Let's go over here a little bit. You can go all the way back over here. And actually, let's just get rid of this one very fast. If you want to go far back in time, the support level would be all the way back over here on 47,000. I don't think we're getting anywhere close to that. Just kind of you imagine like way back what happened back over here in 2022. You know, some of these just did not matter all too much. Just the first one after that, we kind of just plummet, and that's because some of the extensional circumstances that weren't crypto related, right? They hit us hard, which in this case was raising interest rates in a very fast way, going through banking crises, of course, and it just leading to a little bit more chaos here. And that chaos was felt by everybody. But, you know, we're all feeling the chaos, I would say, right now. Here's the Bitcoin 15-minute chart. You can see we fell down for like a cool 7 hours of just down. And then only recently we managed to pop off a little bit here. So you're seeing people getting a little bit more excited, buying up a little bit here, hoping that we have a little more of a bounce. And I think we have an opportunity for one. But if you're looking at the charts right now, it says Bitcoin's up $548 from today. So when we started the new candle here, in reality, you know, we were looking pretty nice up here a couple days ago at like $84,000. Now we're at $79,000, and we were at $77,000. So definitely a painful experience today. Let's go back over here very fast. The 4. Because we talked about this support level right here. It didn't hold, and as soon as we broke down for that, you saw everybody short, and you just saw a slashing of liquidations happening across your screens here. So I'm going to get rid of this technical right here, the breakdown that we were talking about on that rising pennant or rising triangle. And now we have to kind of zoom back out again and say, okay, we're in a downtrend. I know we've talked about the MACDs and stuff like that, but let me just say it one more time in case any of you guys are new. We are waiting for these MACDs to get a little bit more bullish, right? We got a bearish MACD, a bearish stochastic, and a bearish RSI. The only one that's giving me a little bit more of an oversold feeling, I think, is the stochastic. The RSI is actually a little bit more neutral than I would like it to be. But historically, when we do get around these 50-week moving averages, I do like what I see here. My concern is that unless we pump up in the next few months, that's May, next month and a half or something like that, we are going to see a death cross between Bitcoin and a death cross between the 20-week and the 50-week moving averages. And like I was just saying before, sometimes these patterns do hold up quite well. And in this circumstance, the last time we had the death cross between Bitcoin, right, between the two moving averages on Bitcoin, was back over here, and you saw how bad that was. Back over here, you saw how bad that was. I would strike that as like an anomaly because of COVID. You saw how bad it was after this one, and we didn't have one before that. So this is definitely more of a perilous time for a lot of you guys out there, including myself. I'm thinking about how much do I want to put in here because this market is just driving me absolutely nuts right now. Is there any more breaking news coming out of this CNBC? Nope. Oil's down, 10 years down, S&P's down, everything's down. Let's see. How much do stocks have to fall before trading is halted? Oh, the details on market circuit breakers. That's interesting. If the market halts today or tomorrow, oh my God, that would be Black Monday type of thing where you see in the movies like holy, that'd be what's happening right here. All right, there we go. $60 is your target for Sol. Yeah, you're definitely gonna see some stuff right there. 15-year plan for your bags. Oh man, that is a long plan. But if you're younger, you're good. And hey, I'm happy to see, my man. We are not looking good at all. Let me put this 15-minute chart on here very fast. What I'm going to do, because I'm going to be chilling with you guys for the next few minutes here, as we kind of see if this bounce can kind of sustain itself a little bit more. Can it? I'm hoping so here. Normally when we have these moves, I'm going to put on the 5-minute chart here, and I'll put on the market sessions. Right? This was New York time, but on a Sunday, which was interesting. Right? But again, this is where the morning talk show people come out. Like I said, Meet the Press, Fox Business, Fox Mornings, State of the Union on CNN, Roundtable or something on ABC. You know, all the president's cabinet members, they go out there and they talk and they sell whatever he's trying to put out there. And of course, they're all trying to sell tariffs right now. And so when you saw them all pop up this morning, right, you just saw the market kind of bloop, spit everything out. All right, this is back over here on Saturday. This is what a normal Saturday, Sunday is supposed to look like. But when the president came out, everybody came out, oh God. This is your normal volatility for a weekday here for Bitcoin, right? Actually, Thursday wasn't too bad. Yeah, you can see the volatility over here on Wednesday. Wowza. See, a lot more volatility in the morning hours for you. So those of you guys who like to day trade. But this day trading is we're going to require some nice leverage and a steady hand and a stop loss if you guys want to get in there right now, because it's just going to be more insane here. So give me a second as I back up a second here. Let's see. What about Matic? I think Matic can have a comeback, but it's going to take some time. I mean, I'm bleeding as far as I can see with Matic right now. All right, so I'm going to light a cigar here with you guys. It's not anything fancy. I'm not going to smoke my Cohibas or something like that, but this is a cigar that I've been getting. It's like an $8 cigar. No, like a, sorry, $11 cigar. It's really nice, though. It's called a CAO, cow or something like that. But I haven't smoked with you guys for a second. And, you know, as we kind of watch the cindering remains of the market right now, why not smoke now and kind of enjoy the downfall of the markets? Because there's nothing else we can do, right? And, I mean, cigar smoking is probably one of the most expensive habits I've ever had, which is why I enjoy these cheap sticks a little bit as well. Wow. There you go. There you go. One of these days I'm going to have some crazy hair product that was like flammable. I'm going to light my hair on fire like Michael Jackson or something. But anyway, let's get back to the charts. If you guys have any questions that are like reasonable, let me know. We're going to be chilling here and watch the market kind of pop off. Or hopefully bounce. I think we have an opportunity. But what you have to understand right now about Bitcoin and the rest of the market here, we have the slightest of trends right now. The slightest of trends. And typically this is going to be a continuation pattern where we break down sometime later on tonight. So just like we talked about the continuation pattern on the 4-hour chart here with Bitcoin. Right there, right? Once he broke down, I mean, we were sweeping. My thing was, I didn't expect tariffs to be as bad, so I was expecting more of a dip and rip type of thing, right? And we didn't really get that this time. So we got dip and more dip, and we came close to breaking the cycle of lower highs that I was looking for here. Higher lows. There we go. So we're back into this, which in and of itself is actually, this right here is a nice bullish pattern that we should be able to break out from and have a nice move back up towards $100 and something thousand. But until we break out, you know, we could break out sometime in May maybe, but April may just be a sideways slog where bears just try to demolish us and Trump tries to demolish us in order to get Jerome Powell to cut rates. And this is where I wanted to talk to you guys about some stuff here. I'm going to turn my volume up here a little bit more. I'm going to turn the volume up on my stuff a little bit more so you guys can hear what I'm about to say or what I'm about to play for you guys. There's 3 videos from Bloomberg that I want you guys to pay attention to. I just got back from my grandmother's house, and that's why I got live just now. But I had my grandmother. I took the remote, and I put on Bloomberg, right? And Bloomberg is like going crazy because they're live right now while CNBC and those guys take the days off. Bloomberg is always freaking rolling. So there's 3 videos I want you guys to watch right now. The first one, if I can find the right one for it, there we go. The first one is market sell-off has been indiscriminate, and that's from L. Ellerian. The next one is Donald Trump, Jay Powell on a collision course. That's the most exciting one, I think. And the third one is the Fed won't wait to respond to the stock sell-off. So the Fed may have an emergency meeting here, which could help us out, but we're going to be looking for that early in the morning tomorrow. Will the Fed say something about all this? Because if they do, inflation may go higher for all of us, but we're going to have a job. That's the thing. Ask you guys this question. Do you guys want to have a job with high inflation, Or do you want to have no job but low inflation? It feels like that's what we're being given. That's the choice we're being given right now, okay? So let's listen to this very fast, and this is about 6 minutes. I will be stopping in every now and again. The market right now is stabilizing. I do like that, but you can see right here as far as Bitcoin's concerned, we are just trying to bounce off of a level of support. The rest of the market, of course, is not open right now like the Dow, the NASDAQ. It's all closed, but we do have the futures here. So there's the Dow futures. Let me back up a little bit. Let's go to the daily chart here. Dow futures, of course, breaking down below support, but they are trying to get back above by the time the market opens up. Risky, but they're trying. S&P, same thing, broke down, trying to get back above before the market opens. The NASDAQ, same exact thing, but you're just seeing how fast all of this has come down here. It is definitely a rout we are seeing. And then, of course, I'm not going to say it all over again here, but Japan just had a horrible day. Everybody's having a horrible day here. And people are talking about now how much these stocks have to drop before trading is halted. So people are afraid that trading may be halted tomorrow. Or the news is trying to freak you out to think that that may happen tomorrow. So, either way. But let's watch the first video here and see what's going on.
Mohammed, welcome to the program, sir. We don't usually get to talk on a Sunday evening, and when we do, it's probably not a good thing. So let's get straight into it. Do you believe these are the start of a set of negotiations, or do you believe these are the new rules?
We don't know, John, because as much as there was uniformity when it came to statements on where we're going to end up, which is this notion of a golden age in which tariffs play a critical role in getting us there, we've heard at least 3 different messages about the short term. Message number 1 from the Secretary of Treasury, there's nothing to worry about. This rush by Wall Street and others to price in lower growth, recession. We had JP Morgan over the weekend with significant revisions. In the Secretary's view, that is excessive. There's no need to do that. So he thinks.
There you go. So that's one of the talks we had about the secretaries. The secretaries right now are saying, don't panic. Everything is doing okay. We should be okay. I doubt them at this point, but that's what they're saying, right?
Everything is fine in the short term. You have a second view that, yes, it's going to be tough in the short term, but it's worth it because these tariffs will hold. And what you're going to get is higher revenue. What you're going to get is protection. What you're going to get is people moving back to the U.S. with their production facilities. Then you had a third view expressed that you have 50 plus countries negotiating. And we may go in a world where tariffs are uniformly low across the world. So I think the hardest thing for the markets right now is not only to try to evaluate where the destination is, but how bumpy will the journey be. And I'm saying that.
Okay, so sorry to interrupt again. I don't want YouTube to get mad at me by playing this video so much. Again, one of the things I want you guys to understand is we put tariffs on a lot of countries out there, not just China, the EU, and the big dogs out there. We also put tariffs on smaller economies like Vietnam, Thailand, all that type of stuff, right? So Trump can come out here and say he had a victory with getting Vietnam to lower their tariffs, which they're trying to do right now. He could say, hey, I got a victory when it comes to Brazil or Argentina or Chile or South Africa, right? But all of those small countries don't matter if we can't get the larger ones to capitulate. It will give us more breathing room, though, if we do get those smaller countries. So I kind of feel like we're on a roll. We got momentum. But speaking seriously here, we need China to capitulate, and we need the EU to capitulate. If those two do it, Canada won't stand up by itself for much longer, and the Mexicans will just kind of slowly drift into that way. But their politics are a little bit more slow, so it'll kind of be a slow walk, but they'll get there eventually. That's if we can negotiate with some of those other countries. They keep on saying we're not negotiating, but this is, answer me. Are they negotiating or not? I think this is 100% negotiation. I do not think these are going to be here for the long term. I think these are big threats. We're taking action. Trump is lying about how serious he is because he wants to get those negotiations happening. And from what it sounds like, there are already countries out there saying, hey, let's figure something out because we're going to get fucked if this goes on.
Because we have technicals playing in. Margin calls are there. People are, in fact, reducing winners and losers across the board to raise cash. Fund managers are worried about actual and expected outflows. So the thing that Lisa rightly said is there is no circuit breaker on the horizon. And the question for the marketplace is, with this confusion about what's happening in the short term, will bad technicals take over? That's the big
bad technicals. Okay, let's go over here to the Dow Jones. You guys know what the bad technicals are. We've already had the bearish MACDs here for a minute, all that type of stuff. That's typical here, right? That's normal. Then we start adding on some of our Lux Algo stuff. We had the bearish change of character back over here in March 10th. And of course, that ended up working out. Red, 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 red. What do you do when everything hits red? You short, or in this case, you buy puts and whatnot. We've already had red across the daily charts for a minute here, all the way back since what, the 20th of February. Oh my God. I guess that was a time. But again, what do I normally look at when I talk to you guys about the easiest way for people to know when to buy and when to sell, and or usually just when to buy? But you see right here, we're going to be looking at a death cross pretty soon as far as the 50 and the 20. By the time those death crosses happen, it could be really painful for the average investor out there. Again, COVID kind of something special here. Back over here, this was 2019. 2018. This is because back in 2018, if you guys don't recall, Jerome Powell tried to raise interest rates, but he got kind of stopped from doing it because the market was like, whoa, 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 free money, free money. Said what? So actually I can show it to you guys right here. Here we go. Let's go back 10 years. See, back in 2018, he was raising rates. Then it stopped. It stopped before COVID happened. And we were cutting in 2019. Then we had COVID, right? So you saw the market be like, oh, okay, we're okay again. We're okay. We can breathe again. So now we have tariffs, but we have no more cuts. And just so you guys can recall this, because I want you guys to understand, right? This February, dip over here, December, right? December over here. This is when Jerome Powell said there's no more rate cuts happening after launching them back in September. Right? So September came around, rate cuts, and we kept on going up. We just kind of went up faster, if that makes sense. A little bit less choppiness. All right, there we go. Back over here.
Big question right now.
So, Mohammed, let's follow up on that and separate two issues. The next phase for markets and the next phase for business, corporate America, and corporations across the planet. The next phase for the markets. So far, we've repriced the cycle, repriced the economy lower. Got that, and we've done it in quite an orderly way so far. Do you see reason to believe this enters a more disorderly phase in the days to come?
It could, John. On the one hand, this sell-off has been quite indiscriminate. Correlations across asset classes have gone to 1. Whether it's equities or gold, the correlations have gone positive and high positive, and therefore value is being created in certain pockets of the market. On the other hand, people are worried about catching a falling knife. They're worried about more deleveraging. They're worried about the margin calls forcing people to raise cash. So, you've got to be really brave to go in and pick up the pockets of value, because there's still a very big cloud, a technical cloud over your head.
All right, so if you guys do want to get over the technical cloud and you guys want to see what out there is actually doing well, remember, you guys can always go to FinViz. Let's go here, and you can see the bloodbath from this past Friday, but you can always go over here to Screener. I'll make a tutorial about this maybe sometime. You can always go to exchange. Now you see me market cap. Go for something large, so like over $10 billion. So it's something reliable, And you can see right here, just going off the letter of the name, right? 6%, 7%, everything was blood, right? Blood. But if you go over here to technicals, you can go right here and you can say, hey, is the 20-day simple moving average above or what? Was the price above it, below it? But you can say the price. The SMA 20 is above the 50, and the 50-day moving average is above the 200, right? And therefore, you can get just a little bit of a more bullish trend if you wanted to. For me, 50-day high, 20 low, let's see. 5 or more below the high, 10 or more percent below the high. There we go. Oh, I don't know if it's updating it here. It's okay. I can just show you anyway. It didn't update it, I don't think. That's okay. Or maybe it did. Yeah, it updated. Damn, that's just bad. Okay, but basically from here, you just kind of have to go through some of these charts and see what's hopping on here. I would say I wish they had the lower one. I think. Well, here, let's just do this. Quarter up 30%. Baba, even Baba went down shit. ESLT is doing okay. And now it's drug manufacturers. There's not really much, is there? Wow. Let's go week up 10%. Nothing was up. Oh my god. Well, let's see this. Let's go over here very fast. Let's do this. Nope, that's new. Rocket Mortgage. Wow. Rocket companies. You guys see all those advertisements. They actually happen to be doing very, very good. Keep an eye on them, I guess. So let's just say week was up, because this week was obviously bad. So out of all the stocks, there was only 40 profitable stocks last week that also had a market cap of over $10 billion. Right. So ABEV Beverages, that's something we've talked about before. AMT, AWK. Yeah, I mean, this market's just been taking a freaking hit so far. Ouch. All right, there we go. All right, we'll listen to the rest of this very fast. And let me go back over here. I don't want to get in trouble with YouTube again. There we go.
Who do you think is more likely to blink first? I mean, this was sort of the downdraft that we saw further on Friday was when...
She's asking who's going to blink first. I want you guys to tell me who you guys think is going to blink first as well, because this is going to be interesting.
Fed Chair Jay Powell came out and clearly said it wasn't going to be him because right now inflation was a serious concern. How much is that fueling this additional round of potential sell-offs that we may see?
It is because we first priced out the Trump put. And then what we heard from Chair Powell on Friday is that the Fed put is well out of the money. And if you look at the latest revisions in inflation, JP Morgan this weekend has PC inflation at 4.4% by the end of the year, 4.4%, more than twice the Fed's inflation target. So I think to go back to what you said, when you looked at what happened in 2020, you need a malfunctioning of markets in order for the Fed put to be back in the money. You need markets to malfunction. You need.
All right, so you kind of get the gist of what he's talking about here. Things aren't good. There's a lot of uncertainty, and somebody could blink here. Now, to kind of transition into that, we have the next video here where this is more about that type of transition between, between the battle between Donald Trump and Jay Powell, okay?
You're describing this as a three-way game of chicken. Just frame that for all of us.
Well, it's a game of chicken between Trump on one side, Powell at the Fed on the other, and Xi Jinping on who's going to be blinking first. You know, Trump is trying to nudge Powell to blink and his monetary policy as a way to push markets higher. But Powell knows that given what happened on April 2nd, if he blinks, there'll be a de-anchoring of inflation expectation, and those stars are going to lead to higher inflation.
There's already going to be higher inflation at this point, according to everybody out there, right? Now, if the economy slows down that much, maybe we won't have that high. But from everything we've seen, this should all lead to higher inflation. So I think he just means it's going to be more higher inflation than we're thinking about before.
So he's not going to blink. Of course, there is a Powell put, there is a Trump put. But Powell, I don't think he cares as much about the stock market. He cares about high yields. Because if high yield spreads were to widen a lot, that's a true sign we're going to go into a recession. This past week, high yield spreads have gone up only 100 basis points. That's not yet a distressed point of view. The point about the Trump put that he doesn't care anymore about the stock market, and he believes that actually long rates have gone lower, the dollar is even a bit lower, maybe that's an easing of financial condition, so he doesn't want to blink. And when it comes to Xi Jinping, there's the beginning of this game of chicken between Trump and Xi Jinping. We started with attacking them, they retaliated, we may retaliate, they're going to retaliate. That's going to lead to a full-scale trade war. I think that Xi Jinping has more leverage. He doesn't face an election next year.
He doesn't face an election. It's crazy how the election cycle kind of fucks with our ability to kind of do what we want as a nation, because you can put pains on specific parts of the country that might be manipulating the people to say, hey, my life is worse right now, therefore I'm going to vote for the other party, thereby making the guy in charge currently say, hey, unfortunately, I got to change my policy now because we're losing this inner battle here. I will say, though, as we look into see what happens over the next few years and months, for the 2026 election, that's Trump's last election. He's not running. As much as he's like tweaking about it, or not tweaking, playing about it, whatever you call it, he's not running in 2028. It's going to be like the VP or something like that, or somebody completely different.
Here, he can use monetary policy, fiscal policy, and currency policy, and structural policy to strengthen domestic demand. And he's not going to give a she put a signal he's going to start to negotiate until Trump is really serious about de-escalating. But it looks like Trump doesn't want to de-escalate with China because he wants to corner China and to lead to a radical reduction of the trade imbalance between U.S. and China. Now, in this game of chicken, I think that we end up actually that the rational thing to do for Trump will be to de-escalate, because if he doesn't, there is for sure a recession. If there is a recession, he loses the midterms, and then he's politically gone. But I think that he might not blink because, one, he may think that it's not going to be a recession, or he might think that if there is a recession, then he can blame it on China, and the people in the Rust Belt are going to support him in his goal of reshoring manufacturing. I think it's delusional. But the probability of really collision course is really rising, and the probability of a U.S. and global recession is rising and becomes a baseline unless Trump blinks and de-escalates.
Hold on a second.
We don't know when that will happen.
Nouriel.
So he thinks Trump should blink and kind of give up on this type of thing because he doesn't think the jobs are going to come. Right now, we've already had investment that kind of like disputes that to a certain degree, but those jobs are going to be a little bit different than your average blue collar jobs, right? It's like blue collar work, but maybe a little bit more automation in the process there, which I think is the future anyway. So why not? But China, America getting into a deeper trade war, right? If we're doing this with China, we need to figure out what the heck we're doing with Europe. We can't fight all these battles at the same time. That's my big complaint about this. You could put tariffs on any country for all I care in order to fix some of these imbalances, which they are. They're not fair trade, right? But attacking everybody at once to me seems wild. And, the market would, agree with us there, at least at that point.
I just want to jump in here. There's a real question over the weekend. We heard from a number of different cabinet members of President Trump. After hearing all of what they said, are you more or less optimistic that there will be some sort of start of negotiations in the next few weeks?
I think there will be negotiations with trading partners that do not matter. You can do a deal with Vietnam. You can do a deal with Milei, Argentina, with Israel. You may even try to negotiate something with the Europeans, but that's going to be tough because they may start to retaliate. The big thing that can help the market is if there is a call between Xi Jinping and Trump, and they say, we're going to postpone these tariffs on both sides by 90 days, and let's try to have a grand bargain.
Nope.
I don't think there is any evidence that that call is going to occur and that negotiation is going to start. If anything...
Remember, guys, if that actually happened, they postponed everything, they would go into negotiations, right? And then all of a sudden, they'd be at an impasse, a roadblock, a wall, and nobody would budge, and then the tariffs would go forward anyway. That'd be a short-term relief for the markets, but it's not going to fix the issue here of at least what Trump is trying to target right now.
I think there is a risk of escalation on both sides because both of them essentially feel that the other side is having some malicious intent. And therefore, I worry that collision course is going to continue. The market is going to keep on going lower and lower. So that's the key thing. Is there a negotiation with China? The rest is not really spare change.
Nouriel, you're usually pretty good during these crises for identifying where there are fractures in the system that could break. What looks to you like it could break if things don't de-escalate?
Well, first of all, you have the direct effects of very high tariffs. If you take an economic model, those level of tariffs of April 2nd at full scale lead to a U.S. recession, and to a global recession through a variety of trade links. But then you have a significant impact on consumer confidence. You have a significant impact on business confidence. You have some wealth effect coming from the stock market. Bond yields have gone down, but during the past week, high yield spreads have gone up by 100 basis points. So any fall in bond yields has been undone by the rise in those spreads, and they're beginning to creep higher. And in the past, the Fed, like in 2018-19, blinked when there was a real massive spike in high yield spreads. And if
So what you guys are what they're talking about here is what I showed you back over here with like the NASDAQ, where if you go over to the daily chart and you go back over here to where are we looking at here? That's 2022's, that's COVID. The market did this, the Fed blinked, and then the market did all that crazy stuff. And that was right before COVID. Again, you take out COVID, it was still going higher and higher and higher. We just kept on going without any bricks because we had all that stimulus coming in, which was absolutely freaking insane. If you guys don't remember the glory days of 2021, oh my God, you're missing out.
if things continue this direction, high yield spreads are going to go even higher. And that's a breaking point, because what matters is not as much in the short run the stock market, but credit spreads, because those affect the cost of capital for the economy. So they're all getting excited about the fact that bond yields are lower, but high yield spreads are much higher. They're going to go much higher. And that can, among other things, kill the economy.
Nouriel, let's just sit on this theme because I think it's a really, really important one. We haven't had a large default cycle for quite a while. Through the pandemic, we avoided that because we had huge fiscal transfers. Where do you think the leverage is now? When you think about where there might be pockets of leverage, it's a question we always have to ask going into a downturn and sudden stops like the one we might see in international trade. Where do you think the leverage is at the moment?
Well, the leverage is especially in the weaker part of the corporate sector. That is, those firms that are essentially high yield, especially the worst part of the high yield, if you go at the C level, or even among $1 trillion of fallen angels have gone from investment grade to below investment grade. That is the leverage. And that leverage has been financed a lot by the shadow banking system, not the traditional banks. So we didn't see it in the balance sheets of the banks. So far, credit spreads have been very, very low, not just for high grade, but also for high yield, because the economy was growing. The balance sheets of these corporates were poor. But if the economy is growing and you have revenues and you have some earnings growth, you can manage. You're not going to have a default. But now, in addition to a balance sheet problem, you also have a P&L problem, that if there is going to be a recession, of course, the revenues and the profits of these firms that are already weak are going to hit. And that's where the credit spreads can widen. But when they widen, they often widen excessively, not only for high yield, but also for high grade. And in a recession, even the high grade are going to be, to some extent, a greater risk. So really, credit markets are key at this point, because we have a huge amount of leverage in the corporate sector with balance sheets that were excessive leverage, but P&Ls were doing well. When you have a shock to P&L, you have a bad balance sheet, then you have a credit crisis, and the recession becomes very severe. Could be.
He's basically saying there's a lot of companies out there that have kind of leveraged themselves into the markets in different parts of their business, right? Now, you guys have probably all traded with leverage by now, and maybe I have too. Of course I have. But if you think about it like this, things are going fine. As soon as you start getting into negative territory, you're not just losing $1 for $1, right? You're losing $5 to $10 for every dollar. So that can be very painful very fast. And if it's too expensive to really get back on that, get more debt and things like that, you're going to go bankrupt. Now, I don't exactly know, and I'm going to look this up very fast before I keep on playing this video. I do not exactly know. Let's see. There we go. That is not it, is it? Oh, I see what happened. Okay, hold on. There we go. Ah, there we go. Okay. So let's ask GBT. Give me a month by month breakdown of number of bankrupt. Oh, how do you spell bankruptcy? Jesus. Oh, God, I hate actually pushing something. Okay, hold on. Oh, but now we have... There we go. Never been bankrupt, so I don't know how to spell it. Bankruptcy filings last January, February, March, April. So March, April, 13, 12, what? 15 months. And let's see what it gives me here. Data not specified, really? %5 increase. September was a 14% rise compared to September 23. Okay. Look harder. If it actually comes back with a down, I'd be pissed because it was lazy. No. Actually, it was a little bit better this time. Yeah, I don't know why it does that. Let's see, that's not too bad though. So we've only had a small amount of an increase so far. January, that was up 13% from, okay, so we're doing okay here. That hasn't been a big spike or anything yet. There could be a spike since the tariffs are now in effect though, so we'll have to pay attention to those a little bit more. All right, back over here, and then let's put this one on, take that one off, and there we go.
As severe as 2008.
Nouriel, does the same logic apply when you say things like that, particularly going back to a year like that one? Does the same logic apply to developed market sovereign balance sheets?
Well, it depends. In the case of the United States, for now, bond yields have gone lower in spite of actually this tariff being inflationary. One, because there is a risk of a recession. Two, because if there is a recession, the Fed may cut rates. And three, the Fed had told us, given what they've decided on April 2nd, we may not blink, and therefore there is not a de-anchoring of inflation expectation. However, if Trump and Powell go on a collision course, each one of them waiting out for their own strike price on their put to be exercised, then could be tensions. And those tensions might lead either to the Fed to blink, but if they blink in a time where inflation is going to rise because of the tariff, inflation expectation get de-anchored and bond yields go higher, or hopefully it's Trump that is blinking and you have de-escalation.
Bob Michael, the global head of fixed...
There we go. So again, this next video is all about the Fed, but I just kind of want to break down what's been happening here. Hey everybody, happy to see all of you guys back here as always. Hey Digital Can, all of you guys that just joined in here, R Lake. If you guys have any questions, I try to get to them in the breaks here of the videos and stuff like that. But if you guys have any questions, feel free to let me know about them. Today's video stream is sponsored by BYDeFi, so if you guys are looking for a new exchange that is having a pretty big promo right now because they see everybody wants to trade because of all the volatility, I have a link down below, and they're giving you some really good benefits right now. Now, unfortunately for us, today is Sunday. This is where a lot of the talking heads come out for the morning shows, the Sunday shows, if you will. And what we saw happening there was that after the horrible day we had Friday, where like this is the Dow Jones, and it just came down quite a bit. Here's the weekly chart of it right there. Let me pull this back up here for you very fast. There we go. All right, we saw just a massive bad week for the SPY. I mean, that's the NASDAQ SPY. Dow Jones, just horrible. Well, the futures kind of went even worse here. You can see the futures dropped down even more. That's the NASDAQ. This is the SPY. This is the Dow. They've all opened up, and we are just lower than where we were last Friday, which is not a good sign. Now, we did manage to bounce off of those lows, which is kind of nice. You can see the wick right here. You can see the wick right there. You can see the wick right here. So we are better than where we were, I would say. But as soon as the markets open, everything tanked. And it's not just the indexes here. You know, oil is coming down quite a bit as well. Oil fell down below $60 for the first time since 2021. 2021. We saw gold coming down, but not nearly as much, right? In fact, gold is actually making its way back up right now because of all the uncertainty. I was kind of surprised why gold actually went down after all this. And then, of course, some of our favorite stuff like Bitcoin and things like that, that came down quite a bit before we opened up a new weekly candle right here. Bitcoin has a support level here, so does everything else. So right now, everything is just trying to hold this level. And if we're lucky, we can see a bounce going on into today. But it's going to be one of those weird bounces where we're bouncing off of a level of support, but we still end up less than where we were on Friday. So it's going to be a bearish pump, which is very odd because in crypto we don't really have them, but in the stock market we have them all the time, right? You open up lower than where you were the previous day, but you grind up, right? So it closes above it, or it could just be the same area where we closed below it. All right, so CNBC's freaking out. Here's the news story right here. Why is this so far off? Why is this? That's all off. That's all off. Interesting. Is this zoomed in? Oh, it's zoomed in 175%. Yeah, what is going on with this particular one? I need to have a box just for news, I think. Yeah, I don't know. Okay. Doesn't matter. Let's go over here. Let's put me in a little bit of a corner. And if you guys can, comment, like, subscribe. It helps with the algorithm. You guys can comment where you guys are from, and that'd be a huge help. Just so YouTube knows people are talking. Like, I literally get to see how many of you guys are chatting, and the chat rate right now is like literally 0. So it's very annoying for YouTube. Or YouTube doesn't like it, right? But this is the big story here. Hong Kong's Hang Seng, I mispronounced it, of course, plunges nearly 10%. Mainland China's CSI 300 slumps around 5% on trade war worries. So that's a little bit worse than we did, which, of course, our economy is a little bit better than China's, obviously. But the Hong Kong one, where a lot of international money is flooding in, that's down around 10%. So they're in for a world of pain, just like we're in for a world of pain, right? So let's see. This is like a variation of the same story we saw a little bit earlier, but I will zoom in and read part of it here for you guys. I just have to relight my cigar because I've been talking so much and not smoking as much, so that could be an issue. There we go. All right, so Asia-Pacific markets extended their sell-off Monday as fears over a global trade war sparked by U.S. President Donald Trump's tariffs fueled a risk-off mood. They really just recycled part of this for the last article. That's fine. This is the point that's important. Hong Kong markets led losses in the region with the Hang Seng Index declining 9.56% in early trading. Meanwhile, mainland China's CSI 300 fell 4.82%. Over in Japan, the benchmark Nikkei lost 6.3% to the 18th month low. That's what we talked about earlier. And then in South Korea, they're down 4.32. And then Australia is down 4.5. And the benchmark slid into correction territory with an 11% decline since the last high in February in its previous session. So again, America is going down here as far as our market, but we're not the only ones going down here. We're taking everybody with us, and it's just one giant game of chicken because, again, there is going to be pain here. You look at the market right now. That's definitely pain. That's pain if I ever did see it. And we're waiting to see if these markets can have a nice bounce or if we're going to continue to go back down here. So, for the last video here, and hey, Michael, happy to see my man. Let's see. If we go back over here very fast, this is the last video. It's nice and simple. The first video was more about tariffs and what's kind of happening at this point, how the market's freaking out. The second one was talking about how Donald Trump, Jay Powell, and China are on a kind of a collision course and kind of how they view all of this panning out. And this one is primarily about the Fed because the Fed kind of controls all of our futures. Because, again, for me, so for someone like me who trades, right, it has a little bit of side business, but mostly just makes income off of trading and being like an influencer that talks about the markets and whatnot, right? I will do just fine if the prices of goods go higher and inflation's going higher because my stocks, my assets, my crypto will all be going higher, and I'll be very happy with that because a lot of my wealth is tied up into those markets. That being said, for the average person out there, this goes back to the question: do you guys, or would you guys rather have a job with high inflation? Right, that's what Trump wants for now. I feels like, right, and then Jerome Powell is more of no job with low recession. But this choice has been pushed upon us because right now Trump is putting on the tariffs, right? So you can find your person to blame here bit by bit. And then, of course, Trump can say, well, Biden fucked up the economy, therefore I have to give you guys the medicine in order to fix it. It can spiral back and forth all day long. But what do you guys want? Do you guys want a job with high inflation, higher inflation? Or do you guys want no job with lower inflation? It's, in my opinion, I'd rather have a job. Right, at least I get some benefits out of it.
Income at JP Morgan Asset Management writing this: both the administration and Federal Reserve are behaving as though the market moves are business as usual. We cannot believe that the Fed will wait until something breaks before responding. Bob joins us now for more. Bob, good evening.
Happy to be here.
GFC.com, the pandemic. Frame this moment. What is this for you and the team?
Well, I was reading Larry Summers earlier, who pointed out that Thursday and Friday were back-to-back the worst market drops, except in 3 other instances: the '87 stock market crash, 2008 the financial crisis, and then 2020 COVID. So this is a historic period, and as you point out, we're down another 5%. I would tell you, in the other 3 instances, the Fed stepped in immediately and cut rates sizably. So I think for now, if you go back to Friday, the Fed can talk tough. They have to be looking at this. I don't know if they can even make it to the May meeting before they start bringing rates down.
At the same
Isn't that absolutely insane? So he's talking about, hey, we have the next meeting, not in April, but in May. We might have an April cut. And typically, when the market freaks out like this, the Fed has always stepped in. And again, that's what we talked about back in 2018, 2019, the Fed capitulating to the market, saying, hey, whoa, we might have gone so far. Not only did they stop raising rates, right, and they just kind of paused it for a little bit. After they paused it for like a couple of quarters, they came back down, started cutting rates again. And that's what I think is the crazy part. So, again, I would expect Jerome Powell to blink before Trump, because Trump has that madness effect, right? So Trump, in my opinion, people are afraid of him because he just seems like a very big wild card. Jerome Powell is the opposite of a wild card. He says everything. He does exactly what he says for the most part. And sure, he makes mistakes, but Jerome Powell is in a pickle right now because he keeps on saying the economy is doing great. The economy is not doing great. Even before Trump and back in Biden, he said the economy is doing great. It was not doing great. And that type of disingenuousness can affect your legacy. And one of these things about these older guys in government, all they care about is their legacy. Biden cared about his legacy. Obama cared about his legacy. Trump cares about his legacy even now. Bush, all the side people like Jerome Powell, they all care about their legacy.
Time, nothing seems to have broken yet. It doesn't seem like things have gotten disorderly yet, despite the margin calls. And there is a real concern about inflation picking back up. How much can you really reject what Jay Powell said on Friday?
Well, you have to reject something he said over the last few years. Remember, they talked about the long and variable lags. So now they're saying they're going to wait for the accident before they respond and then wait for the long and variable lags to take hold. I don't think so. I think if you step back and look at the totality of what's going on, you cannot believe that there's nothing under the surface that's going to break. We already know that businesses in the lower rated end of the quality spectrum have been struggling. When you look at private credit and look at the percentage of amend and extends, it's very high. What happens when their cost of funding just ratcheted up another couple percent and they're going to see top line growth come down as well as their input costs go up? I think this is a serious moment. I do not think the Fed can just sit on the side.
If you do believe.
And there it is. Okay, so here's the next part. This is just an article that we're going to be going over before we go over to X for a bit. There we go. And hey, Michael, happy to see you, my man. Let's see. Loki's in the kennel because I fly out to Vegas tomorrow for the National Association of Broadcasters Conference. I feel so freaking guilty. But tomorrow I get a fence. So while I'm in Vegas, I get a fence put up for me, so I don't have to worry about being here. I'm going to have my grandmother here, but Loki will be able to stay here for longer periods of time, and my neighbors can watch him and kind of let him outside the house, which would be really nice. Now, let's kind of zoom in here because I cannot read in this little teeny thing. let's X out of this. They talked about margin calls. Hedge funds face biggest margin call since 2022 amid tariff turmoil, FT reports. So hedge funds are experiencing the most significant margin calls since the onset of the COVID-19 crisis as global markets reeled from the financial shockwaves caused by President Donald Trump's renewed tariff measures. The Financial Times reported on Friday, citing people familiar with the matter. I always hate when they say that. Major Wall Street banks have demanded additional collateral from hedge fund clients whose portfolios suffered sharp declines in value. Several large institutions have reportedly issued their largest margin calls in over 4 years, reflecting the scale of the market dislocation, the newspaper reported. The surge in margin requirements come as investors react to a new wave of trade tensions. Trump's recent announcement of fresh tariffs prompted immediate retaliatory measures from China, with the other nations expected to follow suit. This chain reaction led to a dramatic sell-off across asset classes on Thursday and Friday. The Standard & Poor's 500 stock index last week fell for the most since 2020, while commodities such as oil and high-yield corporate bonds were also hit hard. We've already talked about oil. Oil was hit hard. Now, this is the part I wanted to read right here. Gold falls unexpectedly. Some of the losses may have been cushioned by prior defensive positioning. In recent weeks, many funds had already been trimming stock exposure and scaling back leverage in anticipation of rising geopolitical tensions tied to trade policy. In an unusual twist, even traditional safe haven assets weren't spared. Gold prices fell by nearly 3% on Friday, suggesting that investors may have liquidated positions in the metal to meet urgent margin call requirements. This is what's so interesting. People have been putting their money in safe havens, but maybe they didn't put enough because they still wanted to get the most of the gains from the tech sector and things like that. But if you have something like an Apple, right? Which, if you go from open, which I guess was right here, to close, is down about 4%, right? That's not looking too great. Or in this circumstance, Apple's freaking broken down. Look at that. Apple's broken down. AMD's been broken down. Let's go to weekly charts to give you more perspective, right? Apple just started its breakdown phase when AMD's already been doing it for a minute. Amazon just getting into the breakdown phase now. Avgo just getting into the breakdown phase now. Bank of America just getting into the breakdown. It happened back in March, but that's still recent, right? ConocoPhillips, oil coming down. You guys know I'm loaded up to the gills in ExxonMobil. Well, I guess not as much as it used to be, but still quite a bit. That went down quite a bit here. Oil is actually not that bad when you consider what everything else is going through. You go over here to Target. Now, Target has some things going on with boycotts because they did some anti-DEI stuff or something like that. And the DEI crowd is their audience. So, Target's going down. But you go over here to NVIDIA. Woo, baby. I mean, look at this. Look at this. Look at this. Talk about those dips over here. Broke down, hit, rejected, now coming back down. We got some support coming here from NVIDIA, though. Go over here to Microsoft. That broke down a while ago. That broke down all the way back in July of last year. Oh my God, Microsoft has not been good. Look at that. Woo! Meta. Woo! Broke down, it looks like this week, or last week, excuse me. Even MasterCard, our beloved MasterCard and Visa coming down. You know how much I love these stocks? I mean, you go to the monthly chart, these things just go up. I've been buying this stuff since I was in college back in 2014, 2013? I mean, I just launched onto a rocket ship and it's been great. At a certain point, this was 50% of my retirement portfolio. That's how much I loved Visa. It wasn't a tech stock, but if you go over here to 2013, let's go to 2013. Even to now, it's still up 764%, right? I'll buy this again. The dips on this one aren't typically crazy. This was the COVID dip, bounced right back up, right? 2022 inflation dips didn't really matter all too much. So I will be buying a lot more Visa. I can't recommend that you guys do it, but Visa is my favorite. MasterCard is also very good. So if you guys want something that's steady Eddie, these credit card companies, or just card companies, processing payment companies, they really do some good stuff here. And tariffs, I don't think will hit them as hard, but people are selling just out of plain fear. Intel, still, garbage juice, if you will. Google coming down a little bit more as well. Google's been in a nice uptrend for a long time, but it may break after all this. We are seeing a shorter term break right now, but that just happened back in February when the tariffs were really kicking off, right? That was like 2 weeks into the Trump administration. Excuse me, coming down quite a bit. Alrighty, okay, let's go back to, I think, Bitcoin right now. Let me see how Bitcoin is on the 15-minute chart. Are we bouncing off? Or are we coming back down? Uh-oh. We probably hit the, we hit the order block. Did we hit our... Yeah, we did hit the price target right there for the bounce. Yeah, it's going to be rough. The only reason Bitcoin stopped right here is, again, if you add on another moving average here, let's just do this one. We're going to turn this from the chart, we're going to turn this to the weekly. And you see that little blue dot that just popped up right there? There you go. That's the 50 moving average, 50 weekly moving average. We're bouncing off of that right now. That's the only reason. But again, remember that pattern we talked about? Hopefully we can hold after this. This is a tiny pattern, so don't get so wrapped up in it, but... Alright. Not my favorite pattern for a bullish reversal. There we go. Alright. Let's get rid of this. Now, as far as everybody on social media and stuff like that, thanks for following me, guys, on X. I appreciate it. I got the link down up in the comment section. Alright. Draymond, some sports stuff. It hasn't really taken hold just yet. I think it's going to probably come up probably tomorrow, I would say. I'm going to be at the airport tomorrow morning, so I won't be able to talk to you guys so much, but I am going to make a video from the airport. And yes, I will be that guy who's talking to my phone on a game about the airport like I'm some big influencer. No, I just want to give you guys an update about what exactly happens, because it's going to be wild. Instead of Black Monday, it's now called Orange Monday. I just want to put it out there. If tomorrow's another Black Monday and it looks very much like it will be, I say we call it Orange Monday. Capish? Right? Crude is down. Orange Monday tomorrow in the markets. Remember who made this crash happen? Right? Democrats right now definitely feel emboldened, right? Tomorrow might go down in history as Orange Monday. Donald Trump. I mean... Oh, that's AI, because I was like, who the fuck is that guy right there? Amorica, M-O-R-I-C-A, Amorica. Oh man. Yeah. So it's gonna be wild. Let's see. He's also tweeting right now as well. Interesting. We're all on the couch now. So what do you call? This one, actually, if you guys have a sense of humor, I love this one. This one made me crack the fuck up. I don't think this person made it. I think it stole it from somebody else, but it's crazy. Jim Cramer warns of a 1987 Black Monday style stock market crash on Monday. I really think it's going to be not as bad just because Jim Cramer said it, but we'll have to wait and see. So far, the market is not happy. But again, just like you're seeing with Bitcoin, you go to the futures are bouncing up. This was the Dow Jones. This is the this was and this was a SPY. This is the NASDAQ right here. They've all come down quite a bit. And of course the news is freaking out about this, but nothing we can do at this point except for kind of see what's happening as far as Trump, as far as the news, what they're going to report, CNBC, Fox Business. You guys should be watching all of this stuff tomorrow because it really is just going to be one of those big days. Any spot level buys? I'm not even trying to time these buys at this point. I mean, we've just dumped so much as far as like the stocks and crypto. I'm taking a nibble, but this is a nibble time right now. This is a nibble. I got some bags I'm just going to be forced to hold for a minute. Now it's not terrible. Thank God I was like one of the few people telling people to sell, well, not sell, scale out last year. So I'm not as levered up as I was, which means I can kind of like hold on for a while with this type of stuff. But it's definitely going to be a bitch. Let's see. Like right now I'm like, okay, Bitcoin has the support level. It's at the 50-week moving average. I'm fine with that. NASDAQ right now, it's at an order block. We're going to open up a little bit below that right now, but we can still finish off the week bouncing off of this if we're lucky. And this SPY right here will come down a little bit more. My hope is that by buying it right now, I can try to catch a falling knife. I can try. And usually when we do catch these falling knives and things like that, where we have like big crashes like this was COVID, if you give it like a few weeks to a couple of months, you're usually profitable again, right? Even back over here, give it a couple months, you're usually good. Even back over here when we had the Great Recession, which is not what we're having right now. We don't have like that type of collapse going on. You know, you gave it some time and you were going to be fine. It's just that with this required a lot of stimulus from the Fed, and this is the .com bubble. Crypto really wasn't a thing back then, heck, even here. But I think I'm betting on Jerome Powell blinking first. And I don't know if he will. I think that's a big gamble on my part. But again, that's why I'm dollar cost averaging in here. And right now I'm looking, this isn't so bad. I mean, as far as like trying to buy back in, I think this is a reasonable spot to put a little bit more money in the market, right? This may be a little bit of a larger purchase, but it's not going to be like massive, if that makes sense. Because my goal is, like, you can imagine I have like an average right now of around like $86,000, right? What I'm going to do is try to move that average back down here towards like $82,000. So my average won't even be right here. If you guys haven't bought anything, you have a nice average. My average will move down towards $82,000. That's what I'm going to be doing, right? Now, if we continue to come down, I may do a few more times of moving my average down lower and lower, but there's going to be a point where basically I move that average. My average is something like this in the scheme of things, and I just wait for it to eventually come back up, and I'll be happy. That's simple, and I would say for the most of the indexes and things like that, it'll be a little bit more simple. But if you want to go into altcoins, I mean, look at Ethereum, right? I told you guys a while ago, Ethereum, watch out for this order block. This is when I would buy some up. We're in the order block right now. I've been buying some up. Do I think we may break down even more? Maybe, right? Monthly MACDs are bad on this one. The weekly MACDs have already been bad. Stochastic is trying to flip, so I'm feeling a little bit more optimistic. So, you know, last time when we see these flips with the stochastic, they usually are a little bit better, especially when they're coming down from the oversold territory, like back over here, bounced, back over here, bounced, back over here, bounced. This is back over here. Where do we actually come up? Low right here, bounced. That one didn't even last as good as I would hope it would. But again, you know, kind of banging on that right now. So I am buying up stuff this week. I am buying up stuff today. I did buy up stuff today. Although I bought it maybe an hour before I hopped on the stream, right? Because I'm not like I'm not buying every little thing out there. I was primarily buying some Bitcoin, Ethereum, and Solana. And you think about it, you can also buy some like Arbitrum or something like that. But I mean, look at that. I mean, that, you know, you could buy this stuff, but it's just not good right now. And like you put something like what's that? There we go, world token, right? Right now, my average for world token is like up here, around like $1.55. Okay, so if I like right here, I'm down like 58%. Now, I told you guys a while ago there were certain tokens I'm just not dollar cost averaging anymore. I'm just gonna wait it out and see what happens. And I'm happy because I would have to keep on dollar cost averaging, putting more and more money in there when I'd like to put more money in Bitcoin or something like that. But again, when this thing wants to, it can spike up like nobody's business. And if you look at the majority of your tokens out there, like even a Sand, right? They can spike up like nobody's business. Link, they can spike up like nobody's business. Even though they have the breakdown technicals there too. So you don't have to have that average be really close to the bottom to still walk away with profits. But unfortunately for us, right, we just kind of have to wait. And this goes from what I've been thinking about Donald Trump and everything happening with him is this, right? So since Trump became president, he's launched a few different types of tariffs, but typically he backs down to a certain degree, right? He's been backing down more often than like getting some master deal out of this. I think that he is not going to necessarily blink, but I do believe with the smaller countries who don't have the economies of a China and the EU, he will make deals with them. And he will tout those deals as massive successes. Once he has that as kind of a nice buffer, right, then I think he should focus on making a deal with Mexico and Canada. They should not be, Trump should not try to crush them unless they really like put up a big fight, in which case I think Mexico will be okay. I think Canada will get hit harder than they need to be because they're in election season right now in Canada and they have to act tough in order to get more votes, which of course ticks off Donald Trump because he knows they're in election, but he's like, even still, you disrespected me, now your people are going to suffer. Okay, get around all that, all right, all that type of stuff. Then I think he's actually on firm ground to go after the EU and then China. My only gripe with all of this, and I would say my biggest gripe with all this, my largest gripe with all this, is that he decided to do tariffs on everybody at the same time. He should have went with Mexico, Canada first, get that situated, then go after Latin America, then go after Africa, and then after that, should have went hard for the EU, and once the EU was figured out, then you go hard at China, right? And because China would have been the best, because as we kind of approach Asia and that kind of area, right? By that time, which I mean like later on this year, by that time we would have seen a few different things happen. But the biggest thing I would say is, they're working on this big package in Congress where they're going to keep extend the Trump tax cuts for businesses. I think even lower the business taxes a little bit more. They're going to stimulate the economy in some areas, like when it comes to border patrol. They're going to put out a lot of that money that has to do with construction and rebuilding America that Biden put in place a while ago. So they have a plan. Unfortunately for them, they just are doing too much because, again, Trump only has 4 years. He only has 4 years right now. So there we go. So it's going to be a little bit more painful than we want it to be, I would say, right now. But I'm still buying. I'm just buying the safe assets. Like right now, my Coca-Cola is like freaking crazy. So again, hell, let me do this right here. Actually, let me just do this for you right now. What stocks does Goldman Sachs buy during times that hold up well and have decent dividends? I don't know. The joke came through my head, but I forgot it. I'm Doug Dimmadome, owner of the Doug Dimmadome. Let's see. There we go. All right, so here's a few. But you got Waste Management, Pepsi, Domino's, and Bank of New York Mellon, right? Let's just go to PepsiCo because I own a lot of Coca-Cola. Let's go to the weekly chart. Let's stretch this out. Coca-Cola hasn't been hit hard as much as you would think, right? Like some of the other companies are like way down here, basically. Right? Coca-Cola's been holding up quite well. Right now, I'm thinking I've owned this for a while because, of course, I kind of copy some Goldman Sachs stuff for my retirement account. Should I probably sell some of this? Or, like, for my Coca-Cola, obviously, Coca-Cola is better than Pepsi if you ask me. So Coca-Cola's doing better. I'm looking at it, and I'm like, damn, okay, my Coca-Cola right now, it's hitting this large level of resistance. We made the resistance back over here in August. We've gotten rejected once in March, and then another time just in late March, basically, right? Yeah, it makes sense off of how that candle starts. Okay. I'm thinking of selling this and using this money from Coca-Cola to buy more Bitcoin, buy some Apple, buy some Google, and then maybe buy some oil companies, because I think pretty soon OPEC's going to come out and say they're going to cut down on production to keep the price back up. So, you know, that's kind of stuff going through my mind. So I'm basically moving some assets around. Meanwhile, I do have those bags in cryptocurrency that are just like, you know. But as far as the stock market is concerned, I'm not necessarily as worried as I should be. And again, remember what I told you guys last year? I was heavy in Nvidia, but with Nvidia, right? I started selling my Nvidia like over here a little bit, and I started heavily selling my Nvidia around here. And what did I just say? My thing is I typically sell too early, but by the time I care, I'm like, it's okay, because the market comes back down afterwards, right? And then I sold a little bit over here, I sold some over here, and I still have a little bit, right? But I was selling way back over here. I missed out on those returns, right? Which means I wouldn't be, you know, I'd be kind of breaking even at this point if I just would have done nothing. But I wanted to lock in profits. You know, my sister's college is, you know, you gotta make those payments. I buy cigars. My cigars are not cheap, although the one I'm smoking right now is cheap. This one is only $13, but some people may think of a $13 cigar as expensive. I have 6 that I smoke that are over $100, which is why don't smoke cigars, kids. They are it's a bad habit. It's an expensive habit, right? So all that type of stuff I need. Plus, new computer, Vegas trips coming up. Not really for gambling, but for business. But all that type of stuff, right? Need to make sure I'm fiscally fine. Is anything popping off right now as far as the markets are concerned? Ape is popping off. No, it's not. It says it's up 3% so far. Oh, it did spike up a little bit until it hit that 200 moving average, though. Okay, not bad. Bitcoin is trying to hold on. It's not doing a great job, but it's trying. So we can see that. So, hey, brother, are you not paying attention? India is the top 5 countries for GDP, and they already want to make a deal. I think it's to cut tariffs in total. Every country we tariff for is reciprocal. Well, yeah, well, still. Doesn't matter if it's reciprocal. Remember, anytime you make a massive change to the world system, things buckle. Things freak out. It's like stopping a freight train, right? You got to gradually make it come to a stop. Then you got to build new tracks and get it to go on those other tracks, right? What we've done is we just kind of put up a blockade and be like, hey. And let's not call it a blockade. Let's say it's something more of a rough braking system on the train. And right now we're in the jittering of like, and we're all like freaking out because we're like, whoa, what the heck's happening? Or when the Titanic hit the iceberg, you know, when everything was shuddering, everybody's like, whoa, what is that? What is that? We're kind of in that freak out moment right now. After all this is said and done, I think we'll be fine. The country will be fine. We may go into recession. We'll have to see how bad it gets. But I'm hoping Jerome Powell has the sense to just freaking start cutting rates. I'm hoping. When it comes to India, you know, I've never been that impressed with India's economy as far as how it works with the United States. I have never really dove too much into the Indian stock market and tried to figure out good things that they have over here that I could really buy that were really good growth prospects. Plus, there were some incidents a couple years ago where there was some false reporting going on as far as the earnings reports, which kind of spooked me a little bit as well. But we can break that down as well. And can you break down the United States and India trading markets and why Trump put tariffs on them? Yeah, let's just do that. All right. So as of recent years, the total trade... Oh, actually, I have a system for this right here. Boom. There we go. Can I zoom in a little bit more? Nope, cannot. That's okay. So... Okay, so bilateral trade value. As of recent years, the total trade between the United States and India has reached over $190 billion annually, making the U.S. one of India's largest trading partners. Key exports to India: aircraft, machinery, medical instruments, almonds, and crude oil. All right. Key U.S. imports from India: pharmaceuticals, textiles, precious stones, diamonds, ooh, IT services, and steel and aluminum. IT services, that's crazy. Steel aluminum, right? Trade tensions under Trump. Donald Trump's administration took a more aggressive protectionist approach to trade, focused on reducing U.S. trade deficits and bringing manufacturing back to America. India, while an ally, got caught in the crosshairs of this broader agenda. Here's why Trump put tariffs on India. Trade imbalance. Trump's view. India was exporting far more to the U.S. than it imported. This imbalance, in Trump's view, words, made it a tariff king. The U.S. deficit with India, roughly $24 billion annually, mostly from pharma, textiles, and IT services. You know, it just seems kind of an awkward thing to be going after them for that. Tariffs on U.S. goods. India imposed high tariffs on U.S. goods, for example, over 100% on Harley-Davidson motorcycles, despite U.S. pressure to reduce them. This is where I feel like the barriers they put up, right? This is where I think it's more important, not so much about how much we sell or how much we buy from, not how much we buy from, but how much we can sell. He called it unacceptable, and I think it is. I think they should not have trade barriers up there. They have the little moped system out there. Freaking put some Harleys out there, get some noise, vroom vroom. That'd be awesome, right? Withdrawal of the GSP, the Generalized System of Preferences. In 2019, Trump revoked India's GSP benefits, which had allowed duty-free entry for over $5 billion of Indian exports. This move was meant to pressure India into reducing trade barriers and opening its markets more to U.S. firms. Of course, COVID happened. That didn't happen. Digital trade and data localization. India began pushing for data localization, requiring foreign firms to store data locally, which impacted U.S. tech giants like Amazon and Google. Trump's team viewed this as a barrier to digital trade, one of America's largest export sectors. Right? And retaliatory tariffs. Right? India retaliated with apples, almonds, and walnuts. So my fellow Washingtonians got hit because of that. But in the broader scheme of things, right? Well, that basically kind of sums up what he's trying to do with a lot of these other countries right now, though. But I don't think that necessarily the money that he's getting from tariffs, I don't think all of that's going to pay our deficit. I think, in fact, I think it's just going to be really, well, part of it, not all of it, part of it. Part of it's going to be used for paying subsidies to these poor farmers who are going to be hit freaking hard. Like, the one thing you don't want to see, like, from Trump's point of view, is farmers going out of business because you put tariffs up. And again, as most of you guys know, I'm all for tariffing some of these countries and trying to fix the unfairness, as Trump puts it, with them. I just think there's a better way to do it. But I'm no expert, but that's just how I feel personally. Little fire. There we go. Get some Zen pouches. What are those? We need lower rates to refinance. We do need lower rates. Everybody wants lower rates, but it's going to take some time. Although you could say Trump is helping you on that front by freaking everybody out because people aren't going to be spending as much on things like that. You're lucky I'm not President Trump because I would have said to any country that has a problem with the tariff, I'm not sending you food exports anymore. But again, if you don't send them food, that means our farmers, right, your farmers as Trump, are not able to make as much money, which means they have to take out loans to keep the farms, or you have to give them money to kind of subsidize the fact that they're losing money based off of your policies. All the farmer wants to do is grow his crops and sell them for a good price and make a profit and become wealthy and maintain his land, right? If you do that, you're saying, hey, I'm not going to allow you to sell to certain segments of the market because of what they're doing in other areas. So as the farmer, you're saying, well, what the fuck did I do to you? Right? And the farmer would be like, hey, motherfucker, I voted for you. Like, why are you doing this to me? Right? And so Trump has time until the 2026 midterm, so I'll address all this. But he's going to have to give them subsidies if he wants to get this going for longer, and I think he probably should give them some subsidies earlier. There are other spots like Apple. Fuck giving Apple any money. Fuck giving Microsoft, Google, any of those guys money. They don't need more money, right? They can squeeze some of the margins down. They'll lay off some people, and that'll be painful for the people getting laid off. But for the business themselves, they don't need any subsidies. But if you're like a a brick and mortar, small mom and pop business, or you're like, I buy wine, right? I buy wine from this little place called Tacoma Wine Merchants, and I get wine for my cigars, wine when I'm drinking with friends, kind of like, hey, how you guys doing? Here's a bottle, whatever. People like that, I know they're getting hit by tariffs, so I bought an extra bottle of wine when I was there. Right, not like a lot, but like I bought an extra bottle. So a little bit of help, because I know they're going to be hit with the margins. They're going to have to raise the prices of all their wine. They're going to be ticked off, because people like me are going to be ticked off when I see those higher prices. Just another tax to Americans. Not only do we pay premium for products, we're only going to have to spend more taxpayer money subsidizing companies. Yeah, there you go. See, I don't want to subsidize the corporations. I just want to subsidize the farmers. Tariff revenue comes out of American pockets. And that's what's so interesting, because as other countries retaliate against us, they themselves are taxing their own citizens. And that's why you've seen some countries like Mexico, they're not tariffing us because they don't want to fuck with their own economy. They're just like, hey, okay, you're feeling pain because of this. We're not just yet. Some of our companies are, sure, but it's not as bad. If we just kind of like put up with it for a little bit, we can work something out. Right? But see, this is a fucking wild statement. Okay, we're right here. Treasury Secretary Bessent says Americans looking to retire aren't concerned about day-to-day markets, dismisses concerns about potential recession. Now, I listened to this thing. It wasn't as bad as they're trying to portray it here. This is just like a media spin that they do. But people are concerned about the day-to-day markets, because if you look at your portfolio, again, if you have a lot of money in your retirement account because you're old and you've been saving for decades, 1% is like thousands of dollars. In some cases, tens of thousands of dollars, right? If you have a lot of money and you're retired, that could be a $50,000 loss in a day if it goes on 5%, something like that, right? So really depends on this type of people. But again, there's nothing we can really do about this. I'm buying this market right now. I'm not saying don't buy, don't do anything. What I'm doing is buy. For most people that really want to take some time and like figure out when they want to buy, you have tons of time, right? Again, we've seen these moves before where the market just kind of goes just breaking down left and right. You buy and you hold, you zoom out, you're fine. But when in the midst of this type of stuff, and we're dealing with politics, it's always going to be nasty. If you want nastiness, go over to X. They're calling it Orange Monday, not Black Monday, Orange Monday. Trump's tariffs trigger market instability. Breaking, Chinese stock market falls at 10% at open. Insane, right? We're falling down 5%. China's falling down 10%. They're getting hit harder than we are, right? Because we buy everything from China, obviously. And then Trump's tweeting about this. Oh, Donald Trump's post from his Truth Social account, right? So, and here's Patrick Bet David. Black Monday income, unsolicited advice before the market opens tomorrow. Watch this before the bell rings. I'm not going to watch it because he'll just say the same stuff like, oh my God, don't freak out. Don't sell because all the rich people are going to be buying pretty soon. Yada, yada, yada. That's what they always say. But for somebody that has some cash on the sidelines from last year, I'm deploying it now. Is it a lot of it? No, but I'm still deploying it because I feel like it's a good opportunity to buy a dip, because I think Trump could reverse some of these tariffs fairly soon, especially if you can get some of the smaller countries on board. It becomes a cascading effect, and I think we'll be fine. And I'm also hoping, again, like Jerome Powell will fix some of this stuff as well here. So that's also something to think about. And hey, KJ, waiting for everybody to say, please, please, it's too much winning. We can't take it anymore. I've heard both sides of that. I have heard of people saying we're winning, as far as like cutting government jobs and stuff like that. But you look at the stock market, it is not winning. That is not winning for sure. But okay, everybody, I'm going to call it a night right here. I may be live streaming very early in the morning, around 5 to maybe 6 o'clock. I am going to go out with a couple of friends before I have to go out to Vegas tomorrow. And when I get back, I may go live even around like 12:30 to 1 o'clock. It really just depends. But I'm hoping to, I got to pack. I haven't packed yet. So after I'm done packing, I probably will go live for a little bit. We may look at the market open. But I leave my house, I think, around 6 o'clock or something. And then I'll be at the airport. So I'll make a video from the airport. But you guys should have a good, solid stream before that, I'm hoping. Maybe not. I don't know yet. where I can kind of tell you guys what's going on. But if I can't, I'll just do it at the airport and say, hey, everybody, this is what's going on with the markets. Not looking so good. I'll have a piece of paper and read off some notes, and you guys will be able to see what's going on there. But yeah, so relax, everybody. It's going to be a crazy day. I enjoyed streaming with you guys for now. But, ooh, it's going to be tough. And hey, really happy to see you guys. Happy to see you, ma'am. Black Monday, Orange Monday, whoever what it calls, it's going to be a very interesting Monday. And again, we might have the opportunity to have a green day, but still be lower than we were on Friday. So keep an eye out for that as well. Thanks.